Well, hello, everyone. Cynthia Tomaine here with Interactive Brokers, and thank you for joining today's webinar with GreenTraderTax. We're very pleased to have Robert Green with us here again today to talk about or to discuss some last-minute tax tips for traders ahead of the looming deadline. So with that, please join me in welcoming Robert Green as our presenter today. Robert, I'm going to go ahead and pass the controls over to you. So if you can share your screen, we'll get started here today. Thanks for joining us, Robert.
Thank you, Cynthia. Okay, everyone, let's get started with last-minute tax tips for traders. It's April 10th. Well, April 15th is the big tax deadline. I'm Robert A. Green. I'm a CPA, managing member of Green, Neuschwander, and Manning LLC, our CPA firm, and CEO of GreenTraderTax, our publishing firm. Green, Neuschwander, and Manning LLC is a CPA firm dedicated to the needs of traders, investment managers, and other types of clients. We focus on tax compliance, preparation and planning, accounting, consultations, entity formations, IRS, and state tax controversy. I founded the firm in 1983. We've expanded greatly over the internet over the years. I have great young partners. Darren Neuschwander and Adam Manning, my partners, are very busy today with tax extensions, as are the rest of our CPAs. We have a great team. This information today is educational. If you want individualized advice, you should get it from us in a paid consultation. I will give quick answers today to very quick general questions, but answers should be customized to your needs. There's a lot of back and forth. I ask as many questions as I give answers to pinpoint what the best solution is. I and my companies are not affiliated with Interactive Brokers. We just do these webinars for Interactive Brokers. So today, we're going to focus on many traders are filing 2018 tax returns or extensions, and they also need to be aware of that Section 475 election, that tax loss insurance. That deadline is April 15th. I'm getting a lot of new clients these past few weeks in consultations where they want to talk about trader tax status to claim it on their 2018 return for business expense deductions. But it was too late to elect 475 for 2018, but it's not too late to elect it for 2019. And so we go through the exercise of figuring if they qualify, is the election right for them? Do they have any reasons to maybe not elect, like a capital loss carryover? So we go through all that. Now, also, I'm saying at this late date, you should file an extension. It's just too late to scurry around last minute to rush in a tax return with perhaps errors. Why not file a tax extension? And there's 12 tips to save you money with tax extensions, and I'm going to go through those tips today. And finally, I'm leaving a nice block of time today to answer questions about trader tax, 475, tax treatment, QBI. But I don't want to answer questions on general tax like SALT or mortgage interest or, education credits, that type of thing. So April 15th is the deadline. Individual tax returns for 2018 are due April 15th. However, most active traders aren't ready to file. The ones on the call today are probably not ready. That's why you're here. Now, some brokers issue corrected 1099-Bs right up until the deadline, even beyond. Why rush to file a return only to get a corrected 1099-B or a corrected K1 or a late K1 later on and then have to amend a tax return? That's extra work. Many partnerships and S-Corps file extensions, particularly this year with a new tax law with the qualified business income deduction confusion. So they themselves filed extensions on March 15th. They had to file a month earlier. And they don't issue final K1s to partners until after April 15th. Maybe they issued a draft K1. Now, we've seen the K1s coming out of hedge funds. Many don't have QBI on taking that one position. Some others do have QBI taking the other position. We pointed out there's uncertainty with the qualified business income deduction for traders and hedge funds. Now, finally, many securities traders are struggling with accounting for wash sale loss adjustments. Now, maybe, if you look at the 1099Bs, and IB puts out a nice 8949, they put out a really good tax package, one of the best of all the brokers. And the reporting varies across the map by brokerage firm. When you see that wash sale loss disallowed, it could be for the whole year. What's key is what is the disallowance at year end. So you might want to use trade accounting software, and we have a trade accounting service we offer after April 15th. It's too close to the deadline now to sign up over the coming days. But it's very important that if you had an existing account from 2017 and you run the trade accounting software for 2018, you have to manually enter your opening wash sale loss adjustments from the prior year. So no matter how you want to deal with wash sales, whether you want to try to dissect the 1099B, whether you want to run a trade accounting software, there is some areas that will be confusing and lead to potential errors, and you need to follow a protocol to do things properly. Traders know that if you botch a wash sale adjustment, it could be $50,000, $25,000. It could be a huge difference on your taxes versus just an expense deduction of $1,000. So don't rush your returns. Estimate what you think you owe. Try to get the wash sales correct. And again, remember, the brokers, they may put out a nice 1099B, but it's based on rules for brokers, which are based on identical positions, just the stock symbol on that one account. But the IRS rules for taxpayers are different. They want you to do it on substantially identical positions. That's between stock and options at different strike dates, and across all your accounts, including if you trigger it with an IRA. So if you want to do it right, the oranges, then you got to depart from the apples. Apples are the oranges. Apples are the 1099B. Oranges are the trade accounting software. But if you're going to go into the world of oranges, make sure that your opening entries pick up the difference between the apples and the oranges. It's a little confusing. We'll have more webinars about trade accounting in the coming months, but that's why we told people not to rush to file, to try to get this sorted out. Now, the extension has always been good news for traders. My partner Darren Nushwan just sent me a news flash from the IRS yesterday or the day before. The IRS is recommending extensions this year, because it's just too much stuff with the new tax law. There's so much confusion. Stuff is going to change. The regulations are being modified. The guidance is still coming out. I was reading guidance this morning about the SALT limitation and the home office deduction. That one issue alone is so confusing. And you think that they were talking about tax simplification to reduce, the itemized deductions and have a standard deduction. But that one rule change is unbelievably confusing. So the good news is traders don't have to rush completion of their tax returns by April 15th. No taxpayer does. They should take advantage of a simple one-page automatic extension and make the payment of the taxes owed. You're not getting an extension of time to pay. You're getting an extension of time to file. Now, if you can't pay, so be it, but file that extension, and then you'll have a late payment penalty, but at least not a late filing penalty, which is 10 times the amount. Now, most active traders file extensions. Now, for our client base, if you came to us early on, you were very organized, maybe you traded futures and there are no wash sales, we knew about your trader tax status, you're a very organized person, you got to us early on, you filed your return. But if you came to us the last few weeks, hey, it's too late, you got to file an extension. And the extension is great for you and for your accountant, of course, because you don't want to rush an account in the last minute. So here are the 12 tips to save you money with extensions. You know the old adage, the early bird gets the worm. But the IRS is the bird and you're the worm. So you file early, you may be the one selected for audit. Now, I know that with cyber theft, identity theft, cyber threats, that people want to file early to get their refund. They don't want some crook filing with their social security number to get their refund. The IRS has really beefed up their game with the personal taxpayer identification numbers, identification. So it's not as easy to do that. I don't think you have to rush to get your refund because a crook could beat you to it. I think you can still wait. Tip 1, get 6 months more time to file. I mean, you just file that form and you got 6 months more time. The real deadline for sophisticated taxpayers is October 15th. That's 6 months from April 15th. If you filed an extension on March 15th as an S Corp or a partnership, you had 6 months and it was due September 16th. So if it's always the 15th, but if the 15th falls on a weekend or a holiday, then you go to the next day. Now, Form 4868, that's the federal tax extension, the instructions, you could take a look at that. They point out how easy it is to get this automatic extension. No reason is required. You're not going to get a confirmation, it's automatic. It's an extension of time to file a complete and accurate tax return. It's not an extension of time to pay the taxes owed. So you should estimate and report what you think you owe for 2018 based on your tax information received. Now you have your W-2, you have your 1099 interest, dividends, 1099-R for pension. You have a general idea of your trading gains and losses, hopefully a handle on wash sales. If you know you have losses, well, you know you have the capital loss limitation of $3,000. So the biggest issue is, do you have that phantom income from the wash sale loss deferrals? Took losses in December, bought it back to catch the rally in January. You had to defer the wash sales. That could have happened. So that's really the one thing that you have to estimate. Run it through your draft tax software, come up with a tax liability, what your withholding and credits are, and what the balance due is. And then you pay that balance due. You need to avoid penalties from the IRS and state for being late. If you get a whole bunch of penalties, then you're going to be sorry you filed late. But you can avoid all that by following the strategies properly. So learn how IRS and state late filing, that's filing the return late, or the versus late payment, making the payment late. They're two different penalties, and you can avoid them entirely or you can reduce them. You can say, listen, I'm going to avoid the late filing penalty. That's the big boy one, just by filing this extension. I'll owe the IRS money. I need to use the capital to trade and make back some money. It's sort of like a margin loan. I'll pay that late payment penalty. It's not too bad. And to me, it's like a margin loan. That you might have that type of rationale. I think that's dangerous, by the way, because you could lose the money and then be in hot water with the IRS. So take a look at the Form 4868, the 2018 form, and look at the page 2 for the penalties. And here's an excerpt of it. The big penalty is the late filing. You got to file that extension form. I don't care what you put on it. I don't care what you pay. Bottom line, whether you e-file or paper file or call the IRS, it's very easy to do. I want you to file the extension by April 15th. Because if you don't, a late filing penalty is usually charged if your return is filed after the due date, including extensions. So if you don't, you got to file the extension by April 15th, and then you got to file your return by October 15th. The penalty is usually 5% of the amount due for each month, 5% a month, or part of a month your return is late. The maximum penalty is 25%. So if you're 5 months late and you owe $100,000, your penalty is $25,000, 25%. Now, if your return is more than 60 days late, the minimum penalty is $210,000. So If you say, Bob, I don't owe any money, and you could be wrong, by the way, if you got the wash sale stuff wrong. But if you think you don't owe any money, then you might be thinking, well, the minimum penalty will just be 210 because I don't have a balance due to assess the 5% penalty or the lower amount that you owe. So, that's not too bad, 210, but why not just file the extension in case you got something wrong with your estimates? Now, you might not owe the penalty if you have a reasonable explanation for filing late. If you want to hold on to trading capital, that's not a reasonable explanation. There are very few reasonable explanations. I mean, if you had a car accident and you just couldn't file, that could be reasonable. But I mean, if you're able-bodied, you got to file. Now, don't put the reason in with your tax return or anything else. You got to attach the statement to your return. Well, excuse me. You don't attach it to the 4868. You attach the explanation to your return when you file it before October 15. So that's the late filing penalty, the big one. And you can avoid it just by filing the extension. Now, can you pay what you owe? Well, first of all, you may not even know exactly what you owe right now. And so you may be willing to pay what you owe, but you're not quite sure what you owe. Hopefully you're going to pay 90% of what you owe because the late payment penalty is usually half of 1%, so 6% a year, of any tax other than estimated tax not paid by the regular due date of the return, which is April 15th for calendar year filers, April 17th if you live in Maine or Massachusetts because of the Patriots' Day holiday. It's charged for each month or part of a month. The tax is unpaid. The maximum penalty is 25%. So you might have not paid for years, and it could add up to 25%. The late filing penalty, that's going to hit the max right after 5 months. The late payment penalty can go on for years before you get to the max. And those two penalties interact as well, and I have examples of that on my blog post. The late payment penalty won't be charged if you can show reasonable cause for not paying on time. Holding on to working capital to trade or make back losses is not reasonable cause. So you got to attach the statement to your return fully explaining the reason. You don't attach it to the 4868, excuse me for jumping. So let's go through the rest of this late payment. So you're considered to have reasonable cause for the period covered by the automatic extension if both the following requirements have been met. You owe $100,000, you pay 90%, you pay $90,000. When you pay that other 10% with the return by October 15th, there won't be a penalty because you were at least 90% paid. And the remaining balance, you do pay it with the return. So you make that final payment with the return. Now, check with your state because the state rules may be more onerous and you want to make sure the state is paid fully. And then if you owe money, probably owe it to the IRS. Now, again, file the automatic extension even if you cannot pay. Make sure to file the extension by April 15th. It should help avoid the late filing penalty, which is 10 times. It's 5% a month versus the late payment penalty of 0.5% a month. So if you can't pay in full, or you just simply don't want to pay, and I stress that it should be can't, not want, you should file your tax return or extension and pay as much as you can. Add a payment cushion for Q1 2019 estimated taxes due. I do that myself every year, and I've always done that. Traders with 2019 year-to-date trading gains and significant tax liability in the past year, well, they're going to owe estimated taxes for Q1 because unless they lose the money later in the year. But if you're a consistent profit maker and you know that, hey, if I don't make my quarterly estimated tax payments, I might have an underestimated tax penalty at year end, and those rates have gone up. So I want to make a Q1 payment, but why make a Q1 payment? Why not just overpay your extension and then have an overpayment credit to apply to Q1 and or Q2. And this way you give yourself a nice cushion for Q1 on in case you're not sure of what you made a loss in the wash sales and the like. Now, interest rates have been historically low the last 10 years, but the applicable federal rate, the AFR rates, have been creeping up with the interest rates that started to climb the past year plus. Now, again, they've tailed off a bit, but the AFR rates have gone up. Tip 5, consider a Section 475 mark-to-market accounting election for 2019. That's the tax loss insurance. Traders eligible for trader tax status in the business of trading, they should consider attaching a 2019 Section 475 election statement to their 2018 tax return or extension. These are due by April 15, 2019 for individuals and C Corps, and March 15th for partnerships or S Corps. Section 475 turns capital gains and losses into ordinary gains and losses, thereby avoiding the capital loss limitation and wash sale loss adjustments on securities. The wash sales are a royal pain in the neck. Just so much stuff slips off the table. So many traders wind up, even though it is a deferral in a taxable account, and it's a permanent, by the way, wash sale loss with an IRA. Even with that being said, the way the system works is just so many traders wind up being stuff falling off the table and missing out on deducting those wash sales. And it's ridiculous that we have these rules, because the rules for brokers are different from taxpayers. There's so much confusion, so much lost. I don't know why the IRS has these rules. It's ridiculous. They don't have it for futures with mark-to-market. It doesn't apply. I mean, if you take a loss, it's a loss. If you get back into it, then your holding period starts fresh for a long-term capital gain. I'm going to write to the IRS, do a petition. They just have to get rid of those rules. They're just plain outdated and don't make any sense. And they lead to so much disenfranchisement of traders. And when I send that petition around, I hope people will sign it. So get your tax loss insurance. If you want it as an existing individual taxpayer, you got to do it by April 15th. Now, if you have a huge capital loss carryover, it gives you pause because you need capital gains to use up the capital loss carryover. Otherwise, it's just $3,000 a year that you can use against ordinary income. If you have a large loss in Q1 2019, you want to elect no matter what. You can always set up an entity for it to get back to capital gains treatment. So think out what the moves are. So let's say you're sitting here today. You want to elect 475. I have the election statement in my guide, the 2019 Trader Tax Guide, and I have it on a recent blog post. So you print out your 4868, you staple the election to the 4868, and you mail it to the IRS. If you e-file the extension, there's no way to make the 475 election. If you're getting ready to file your return, e-filing a TurboTax, TurboTax doesn't support the 475 election, so you're probably better off paper filing. So make sure that however you do it, it's done properly. The IRS is not going to confirm it. You'll sign a perjury statement when you file the 3115, the second step, next year when you file your 2019 return. So 475 are two parts. The one simple election statement now, very simple, one paragraph. The more complicated 3115, that's next year. You got time for that. So just make sure you do this properly and you make the right decision. If you don't qualify for trader tax status this year and you make the election, it will be null and void. If you elect it but don't want it next year, you can revoke it next year. Spend some time on this issue. This is a crucial issue for you. We hope that the QBI deduction, qualified business income deduction, applies to traders with 475. 475 is QBI. Traders are a service business, but there are lingering questions about Section 864B and C. 864B says that a trader in securities doesn't have ECI in America, but that's always been the case. And we thought that 864C shows what's effectively connected with America for what is domestic QBI. Some people read it as traders are out of luck. Others read it, traders are in luck. It's a lingering question. We hope to solve that soon. But that's another potential, I would say, it's a long shot benefit for another benefit for the QBI if you're not priced out of it with too high an income. So if you elect 475, do it for the tax loss insurance. That's the cake. We had hoped the icing on the cake could be the QBI. So tip 6, file when it's more convenient for you. It's not convenient now after all this confusion on QBI, on everything, on wash sales, on reporting, everybody's confused. Sophisticated and wealthy taxpayers have always known the real tax deadline is April 15th and September 16th this year for pass-through entities, partnerships, and S-corps because the 15th on the weekend. So, and again, the pass-through entities had to file their tax extension by March 15th, and they had to elect the 475 by March 15th. So you're going to consider this 2019 475 election. Hold on. No, I went backwards. Excuse me. I went the wrong way. Tip 7. Be conservative with the tax payments. Impress the IRS with your patience on overpayment credits and demonstrate you're not hungry and perhaps overly aggressive to generate tax refunds. If you rush in a return, it's screaming for an audit. It looks really weird. You just can't wait to get the refund. You're so hungry for it. That attracts a lot more IRS attention than, hey, here's my overpayment credit. I expect to be profitable trading next year. I'm not rushing to get the money back. That's always looked better. And so when in doubt, overpay a little bit. It's in the IRS bank. I don't think you should desperately try to trade every dime you have. Don't risk your tax money. That can always lead to catastrophe. It's a wise strategy for taxpayers to overpay and then have credits towards estimated taxes. And if you don't need it for the estimated taxes, then you ask for the refund. Now, tip 8, get more time to fund a qualified retirement plan. The extension also pushes back the deadline for paying money into a qualified retirement plans, including solo 401k, SEP IRA, defined benefit plans. So let's say you're a TTS trader with an S-corp and you did your elective deferral on the solo 401k for $25,019 plus. Well, it was for 18. It was 18.5 plus 6 for the catch-up. You did that through your year-end withholding in December. But your $37,000 profit sharing plan contribution, it's due with your return filing. So if you file April 15th, that's when it's due. But if you file the extension, it's not due until October 15th. You're getting 6 months more time to pay that profit sharing plan contribution. Now, the deadline for a 2018 IRA or even an HSA contribution is April 15th. There's no delay on that. Now, tip 9, don't rush your accountant. We don't allow our clients to do that. If you have one client who dominates an accounting firm unreasonably that last week, it's to the detriment of all the other clients. Accountants need to be very strong-willed about this because rushing the last minute for the client, for the accountant, for the reviewer, leads to a lot of stress and potential errors. If accounting firms have zero tolerance for quality controls, they're not going to allow that. My partner, Darren Nishwanda, is fantastic on best practices. We have internal deadlines. You have to meet them to have an expectation of filing before a deadline. Now, this time there's an easy extension. But going into October 15th, you do not want to miss our internal deadlines or your accountant's internal deadlines. If you work with an accountant that lets you abuse them that last few days, you got to wonder what kind of firm that you're dealing with to allow that type of potential for errors. So your accountant can prepare extension forms fairly quickly for a nominal additional cost related to the job. So they started on your draft return. They entered the W-2, the withholding, the simple, the low-hanging fruit. But, you know, the trade accounting maybe has some questions. There are some missing K-1s. Maybe some of your expenses are estimated. So you just cut it off, do your best estimate, print out the extension. There's no fees that go with the extension. The IRS and state is not charging anything for it. So just be sure to give your accountant the tax information that you have and the estimates for the missing data. Now, it may be that you haven't even done that, but it's very easy to figure out that, hey, I have a W-2, I had sufficient withholding, I have trading losses, my standard deduction wipes out my other income. It's a pretty easy extension to do, but don't just assume that W-2 withholding is enough. We found out that with the tax law change that a lot of people were under withheld in their job. Remember, the administration wanted to show those tax cuts hit the pocketbook right away with the weekly paychecks. And then it worked out that people got lower refunds or owed money at year end, and they thought, oh, my taxes went up at year end, when maybe they didn't. It was because the withholding was too little. And now the IRS is adjusting again. So tip 10, if you're a securities trader, you got this dealing, you got to deal with the trade accounting and the wash sales. You have to, first of all, dissect your 1099-Bs, which is pretty tough to do because you're seeing total wash sale losses for the year, and every broker does different reporting. And again, it's apples versus oranges, so you got a tough situation. You want to use good trade accounting software that is compliant with IRS rules, or use a service provider that has that software. Again, if you know you have a capital loss because of a huge carryover, capital loss carryover, or capital losses in the following current year, it's kind of easy to do the extension. But if you have phantom income from wash sales, that's an issue. So don't get bogged down with the trade accounting if you know you have a loss. Get bogged down with it if you know that you have phantom income causing taxes. Now, the capital loss carryover impacts your decision to elect 475 by April 15th. So you kind of do want to have a handle on that if you can. If you know your capital loss carryover is $100,000 and your Q1 gains in 2019 are $50,000, then you skip the 475 election because you want that $50,000 to be tax-free to use up the capital loss carryover. But if you have a huge loss in Q1 2019, then you want to elect 475 and then have a spousal entity or a single member LLC S Corp set up afterwards that gets back to capital gains treatment. I explain all that in chapter 2 of my guide. I don't want to lose you in the weeds today on that. So consider the wash sale loss rules on the securities. I touched on this previously. If you know these adjustments won't change the $3,000 capital loss, you can proceed. But if you suspect the wash sale loss adjustments could lead to reporting capital gains rather than losses, or if you aren't sure of the capital gains amount, focus your efforts on the trade accounting before April 15. It's a big issue this year, folks. We had the market sell off in Q4 severely in early December. People sold to, traders go both ways, but there were a lot of losses, tax losses taken in December, even on investment positions. We're 475 if you had it last year, that apply. So we had a lot of losses in December. The markets came roaring back in January. That was a perfect storm for creating wash sales. Traders sold in December. They said, I'm going to wait 31 days. I'm not getting back in to avoid the wash sale. But they couldn't help themselves. The markets came roaring back. They wanted to catch the rally, and they triggered the wash sales. So pay particular attention to wash sales this year. There's a lot of clients that I've dealt with that have phantom income and owe taxes. And now you owe taxes for 2018. A lot of people can't even pay what they owe. It's huge phantom income. Now that deferred wash sale loss is a huge potential ordinary loss or capital loss in Q1 2019. Don't get a double whammy. Elect 475 for Q1 2019 to turn it into an ordinary loss. We've talked about that before. Tip 11, don't overlook state extensions and payments. Some states don't require an automatic extension for overpaid returns. They accept the federal extension. Many states you have to file an extension. Many states you don't. They just say you got the federal, that's good enough for us. But if you owe the state, then you need to file a state extension with the payment. States tend to be less accommodating than the IRS in abating penalties. You go to your state, hey, please abate the penalty. No way, no how. They want the money. They can't run budget deficits. Tough luck. You'll find the IRS a little bit more accommodating, particularly when we're in bad economic conditions, which is not necessarily the case now. So it's usually wise to cover your state taxes first if you're short of cash. Check the extension rules in your state. And by the way, always check disaster relief. We've had a lot of disasters around the U.S., way too many with all the climate change. And if you're in a federal declared disaster area and there's been a disaster around a tax deadline, always check the IRS site. Sometimes we have some links on our site as well. You might qualify for disaster relief to file late, to pay late, but be sure of what relief you qualify for. Tip 12. So if you're a U.S. resident abroad, you live abroad, you should learn the particular rules. U.S. citizens and aliens residing overseas are allowed, so that means U.S. citizens and green card holders who file taxes in the U.S. on worldwide income. If you're residing overseas, you are allowed an automatic 2-month extension until June 17th, the 15th, on the weekend, the 17th, to file their tax return and pay any amount due with requesting an extension. But they're going to charge you interest from April 15th. So if you owe, you might want to file your extension April 15th with payment, because they're going to charge you interest between April 15th and June 15th, 17th this year. That's a little sneaky. Now, by the way, I didn't have in the slides, but your foreign bank account report, your FBAR, your FinCIN 114, that's been nicely coordinated with the returns. So that's due. Your FBAR is due April 15th, but if you're on extension, your FBAR filing is also on extension. And you don't have to file FBAR for crypto, but if you have your foreign bank account, brokerage account, you have to file your FBAR. So let's now get to your questions, and I'll give you answers. We're going to focus on trader tax status. That's the business expense deductions. The 475 that goes with trader tax status, we talked about that a bunch already. Tax treatment issues like securities versus 1256 contracts with the lower 60/40 rates. Your ETFs, ETNs, options, and other trader tax issues. I'm not going to answer questions about general tax compliance issues. I don't do tax compliance work anymore. My partners do, and all our CPAs do. But we've divided up the roles in the company. And unfortunately, my partners couldn't attend today because they're too busy with our last minute extensions for clients. So I'm going to open up my questions board. But by the way, what you can do is come over to GreenTraderTax for last minute resources. You can use our tax compliance service, but after April 15th, do your new client evaluation then. If you call us up the last few days, we're kind of tied up and busy. Send your questions to info@greentradertax.com. If I don't answer them today, send a very brief question. I'll try to give you a very brief couple of sentence answer. If I think you need a consultation, I'll suggest that. So let's go over to the website now while we answer questions. And let me bring up the question board and drink something. We're 40 minutes in and we have 20 minutes left, but we don't have to do a hard break. And I figured we'd have 15 or 30 for questions. So keep your questions short and sweet. And I have it open right now. So first question, I'm going to say first name, last initial. So we keep confidentiality, anonymity. And when you hear your name and last initial, perk up because I'm answering your question. So James C. And I'm going to go in chronological order from when you put your questions on the board. I am a trader and hired an accounting firm to prepare my taxes as I have little understanding of the tax law. That's par for the course with traders, but unfortunately, par for the course with many local accountants too. You know, they're set up for general tax. This is sort of like medicine now, folks. You know, accountants are like family practitioners, but if you need a cardiologist or a neurologist, it's a specialty, and trader tax is a specialty. Why should a local firm that has 2 trader clients spend all the time that we spend, which is every day, all day, tackling the nuances of trader tax for just a couple of clients? That's why we have a niche that's nationwide rather than a great local firm in Peoria or Chicago or New York City or any small town. Now, as it turned out, now back to the question. Now, give me the luxury, folks, of when I go through a question, I might go off on a tangent. I might start to give a general answer and then circle back to the question. If you sign up with us for as a client for a consultation, there's no tangents or stories. It's get down to brass tacks, and you get notes afterwards. So back to the question. This is the trader that hired the accounting firm, and he has little knowledge. As it turned out, my accountant did not treat the tax prep work appropriately. I'm not surprised. With regards to how my trading circumstances should have been treated, filed. Is there anything that can be done in such cases? Or am I stuck with the inability to effectively deal with substantial trading losses? Yes and no. And I get this a lot right now. Client comes to me, Bob, I started trading in 2018. I made 2,000 trades. I think I qualified for TTS, and I had large losses. It was a tough year last year. A lot of volatility, a lot of tricks in the market. So my answer is, well, maybe we can claim trader tax status once we assess it after the fact. No election was required for that. That would give you business expense deductions, but you might not have a lot of business expenses. That's not really what you're after. You're after deducting the losses ordinary, and you're out of luck. You didn't file a 475 election by April 17th, 2018. And the fact that you didn't know about it, the fact that your accountant didn't know about it, the fact that your accountant gave you the wrong advice about it, if he did know about it, doesn't matter. You flat out missed the deadline and there is no relief. Now, a lot of times with the IRS, if you miss something that you intended to do, like an S-Corp election, there could be late relief for doing it. But there's no relief for the 475 election. The IRS flat out does not allow hindsight. So what do you do now? Now you have a large capital loss carryover going into 2019. That's baggage. Should you elect 475 for 2019? You have this capital loss carryover. Well, if you have a large loss in Q1 2019, then maybe we should elect 475 to lock it in as ordinary. We don't want to add to your capital loss carryover. And then maybe we're planning to set up an entity anyway to deduct health insurance and a retirement plan. So why not now have that entity set up now for the rest of this year? And it can pass through capital gains to use up your capital loss carryover. And then after that baggage is cleared out, the entity can elect 475. So we can help you, but we can't fix everything. We can maybe partially fix some things and come up with the right moves to make going forward, but we can't just apply 475 in the past. Now, Maybe you had a loss in 1256 contracts in 018. Then I ask you, did you have any 1256 gains in the prior 3 years? Yes, I did, Bob. Great. We can do a 1256 loss carryback election. Forget about 475. So come to me now. Give me a chance to see what went on, what partial fixes we can do with amended tax returns or with 2018 filings. Get your extension in to give us a chance to help you with 018. And then what moves to make for 2019. So don't keep your head in the sand. Don't keep working with an accountant who doesn't know what you need to deal with. It's nuanced, folks. All right, next question. I'm trying to give some really good answers here. I know that IB likes it, that I'm here to help their clients and our clients who attended too, because that's the bottom line is traders need help. And there's very few places to get it. And I'm really happy to be here right before the deadline to help you folks. That's our mission. Next question, DWT. Current status of QBI for TTS traders, please. That's the qualified business income deduction. So again, I did cover this on the session probably after you asked the question because you asked it right up front at the start. The new tax law had a big benefit for pass-through entities to try to match the lowering of the corporate tax rate, the flat rate to 21% and less on domestic income. So there's a 20% deduction on qualified business income. Not everything is qualified business income. It excludes capital gains. The law said investment capital gains, but the regulation said all capital gains. So that means even if you think it was business related, it excludes capital gains. So a lot of traders and hedge funds, they don't even want the QBI to apply to them because they don't have 475 income, which is included in QBI, but capital gains are not. They don't want QBI expenses to reduce other QBI income. So a lot of hedge funds don't want the QBI to apply. But a lot of our clients did want it to apply because they have 475. And traders are a service business activity. So that means you get priced out of the deduction if your income is too high. If you're over the 415 married or 20750 single, you're priced out of it on your taxable income. And there's a phase out below it of 50,000 and 100 married, 50 single. So a lot of our clients, they don't make a lot of money and they have QBI and they wanted the QBI deduction. But as part of the regulations, it only applies to domestic income. The law said domestic QBI. So how do you go about determining what's domestic QBI? Well, the IRS figured, well, let's just use the effectively connected income rules for foreign residents. 864 says, see, if it's effectively connected with a U.S. business in the U.S., then it's domestic. So I think that's why they introduced 864C. But when you look at 864B, it says traders and securities are not effectively connected, not U.S. trade or business. But I think that that relates to all traders, not just business traders. And I think that that's telling traders you don't have like a non-resident alien who's trading in the U.S. that they don't have to worry about ECI because it's portfolio income. So there are as many questions as answers. Now, I figured a lot of hedge funds are going to come right out with the confusion and they're going to say no QBI because it's not good for their hedge funds. And I've seen some K1s like that. But I don't want to say that that's a conclusive answer yet. And the IRS, they're not getting back to me about this confusion. So I figure why not wait to see what the consensus is with all these K1s and to revisit it again after April 15th. So I don't have a big update going into April 15th, DW. Next question. So that's, you want to be on extension to give us more time. So you might have QBI losses because you have expenses and you only have capital gains. You're a futures trader and you're glad if QBI doesn't apply, or you might be priced out of the deduction and glad if it doesn't apply so it's less confusion on your return. Or you might be in the sweet spot for getting a deduction and want it to apply. So we need more time. And I thank my partner, Darren Nishwanda, because he wants to see more consensus as well, more work on this before we jump to a conclusion. We don't want to jump to the incorrect conclusion. A lot of the dust has to settle on this new tax law. Every day we still see guidance changes. Like I talked about SALT with the home office deduction today. All right, Perry M. Is it necessary to file a 475 election every year? No, it's not, Perry. If you elected 475 last year or the year before, then you must use 475 every year that you have trader tax status, even the year you elected it. If you stop qualifying for trader tax status, the election goes into suspended mode. It's suspended until you requalify, unless you revoke it. And you can revoke it in a mirror process to the election. By the way, if you had 475 in the past and you want to revoke it, you can revoke it by this April 15th using the same election statement, but adding the word revoke, revocation to it. Same procedure. And I have that on our blog post. So no, you don't reelect it every year, Perry. Zach. Now, by the way, if you have Section 475, ask your broker if they can generate a 1099-B based on 475. I'm not crazy about that practice because I have found that there are some traders out there that tell the broker they have 475, but they never made the election on time. They don't have it. Or they say that they made the election on time, but they don't qualify for trader tax status and they shouldn't be able to use it. 1099-Bs should be prepared for the quote-unquote everyman. They shouldn't really be customized. But if you know you have TTS and you made the election on time and you're consistent from year to year and your broker allows it, you can save yourself a little more confusion with the 1099-B based on 475. And that is a trend. So ask about that. But if you don't get it, that's fine, because again, you can use software that can generate the 475 Form 4797 with the line-by-line reporting. And the IRS understands, which you point out in a footnote, why you depart from the 1099-B. Zach, does filing an extension also apply to TTS or 475 elections? No. The extension applies to your return. So yes, your return will go late and you can add your Schedule C to the return that you filed by October 15th. So in a sense, yeah, you have time to figure out your Schedule C and your footnotes, but you do not have time to file the 475 election. That must be filed by the due date of your prior year return, not including extensions. So existing taxpayers have to file the 475 election by the due date of the prior year return. That was March 15th for an existing S Corp or partnership, April 15th for an existing individual or existing corporation, C Corp. If you're a new taxpayer, a new S Corp, a new LLC partnership, a new general partnership, then you have the new taxpayer exception and can file the 475 election within 75 days of inception. So you set up your entity April 1st, and you have until April, May, June 15th. Count out the days exactly, because some months have 31 days. Don't just assume the month is 30 days. Next question, Eugene K. He was thanking. And yes, the recording will come afterwards from Cynthia Tomain of Interactive Brokers. She does a great job in the production. Thank you for that, Cynthia. Andrew D. First time abatement on late filing penalty. Well, it's going to be very difficult to get a abatement for late filing penalty. You want the abatement for the late payment maybe. But again, if you're able-bodied, get in that extension form, even if you can't pay. Just let's say you think you owe 100 and say, I owe 100, but I can't pay any of it, or I can pay 1,000 and 5,000. Just file and pay what you can by April 15th. First, I don't think they really give you a benefit for so-called first time. It might come into play a little bit. I'm not an expert on all the abatement explanations, or my partners are. Christopher H. I know this is not what you are discussing right now, but if you get time, so I might not be able to answer it if it's general. I've been searching and searching regulations on C Corps to file FATCA. No, we're not going to get into that. That's way off the subject line. FATCA is the Foreign Account Taxpayer Compliance Act. You know, the IRS leaned on, through Dodd-Frank, a lot of foreign banks and brokers to inform on their American clients. You know, you're not getting a 1099, but you're getting a substitute of that. And so if you're an American, or if you own an offshore corporation, a controlled foreign corporation, if you're an American and you're doing business worldwide, America is one of the only countries in the world that taxes you on your worldwide income. So there's no refuge. And with PIFIC rules, foreign passive investment companies, where you have to pick up, you can't get the deferral. You're going to pay taxes. There's no getting out of paying the taxes, and more banks are informing on you. So there's no place to hide. That was the name, period. Please provide a sample 475 declaration. Yeah, it's on the website. Go to the website, click on blogs on the upper right here, and you'll see a blog post for 475. And I gave you the wording. Usually I don't. It's in the guide, but it's also there. It's sample wording. You may have to switch it around a little bit. You probably want to elect on securities only, not commodities, which includes 1256 contracts, because you want to retain the lower 60/40 tax rates for 1256 contracts. So if you have traded securities and 1256 year to date this year and have a huge loss in both and want to lock it in as ordinary in both, then elect on both, and you can revoke it on securities only by next April 15th. So get the guide, click on the guide over here on the right side of the website. It's $60. You get an immediate download. You get the paperback within 14 days. It's shipped print on demand through Amazon. And you'll get that. You buy it through us, so you get also the download. If you buy it from Amazon, you don't get the download. So buy it from us, and you get both. And you'll get you'll go through all the decision-making logic in Chapter 2. You'll go through Chapter 1 to make sure you qualify for TTS. Take the time to get that right. Spend your time there. Don't spend your time figuring out every little expense deduction. You're going to file an extension. You have more time for that. But you got to get it right about the 475. Next question. Ritz G. Does Section 475 also cover losses that are carried over from past years? No. It's not a fix for the past. It's a fix for 1/1 until now. So you got that hindsight. So if you've lost between 1/1/2019 and now, and that includes your deferred wash sale loss adjustments from the prior year, but it does not include your deferred capital losses from the prior year. So you can't fix those prior capital losses. And if you elect 475, you're going to have ordinary gains and losses going forward. So that's why you might want a do-over entity to get back to capital gains treatment, to use up the capital loss carryover, or to revoke the 475 election to get back to it next year. So you got yourself baggage. You're in the capital loss carryover hole. You need a capital gains ladder to climb out of the hole, but you need a 475 emergency election floor so you don't dig a bigger hole. Get this right, folks. Zach, again. Is there any reason not to elect 475 if you're a full-time trader? Yes, if you have that large capital loss carryover and you have year-to-date capital gains, then skip it and wait until you get a clean slate. Now, what makes a clean slate? no capital loss carryovers, no unrealized capital losses, no current year capital losses. You got to see where you stand. Again, the current year you can turn into a 475 loss with the election. Andrew D. What are implications for wash sale loss adjustments in 401k? None. There's no wash sale loss issues with 401k. And then Andrew also asks about IRA and similar tax deferred vehicles. A qualified plan, there's no worries about wash sales. Now, I'm not talking about wash sales directly in your IRA. What I'm telling you is that the IRS rules for wash sales say that, let's say you have two IB accounts. You have a rollover IRA and you have a taxable trading account. If you only have the rollover IRA account, there are no wash sale issues. But if you have the taxable account and you take a loss on Apple, you sell Apple options in May, and you happen to buy Apple stock in April or June, 30 days before or after, in your IRA account, you didn't realize it, but you've triggered a permanent wash sale loss disallowance. Now, IB won't pick that up on the 1099-B because that's not the IRS rules for brokers. They're not supposed to do it across two accounts between the taxable and an IRA. They're not supposed to do it on substantially identical positions, which is Apple stock and Apple options, but you're supposed to do that. And if you run our trade accounting, if you use our trade accounting service, we use software that is IRS compliant that will do that. So you need to have a do not trade list with your IRA, where if you trade FANG or tech stocks, you don't trade that in your IRA. So you don't trigger a permanent wash sale loss, which is catastrophic. You'll never get that benefit. So we're not looking for wash sales in the IRA. We're looking for wash sales that you trigger in your taxable account that you happen to buy back. So you triggered a wash sale in the taxable account. You can't take the loss in the taxable account. You have to add the loss to the basis of the replacement position. There is no replacement position in that taxable account. The replacement's in the IRA. There's no way to record it in the IRA. It's permanently lost. Most local accountants don't follow those rules. Most taxpayers don't follow those rules. So there's a speeding sign on wash sales. We follow the rules. We're cops on the beat. We have the tools to do it. I think it's really unfair that the IRS has rules that are so widely not followed, and yet they let you get away with until they audit you and spring it on you and hit you with a huge back tax bill, if they can figure it out themselves, which they probably can't. It's ridiculous. John E. Can you comment briefly on new tax laws and if you are seeing many taxpayers not itemizing compared to prior years? Well, I don't have as much feedback as my partners do. It's a better question for my partner, Darren Nushwan and Adam Manning, but they've been giving me some of the feedback. We have a lot of clients throughout the country. You go through the top 15 states, and that's our client list. So start with the most popular state, California. Well, you got the SALT limitation. A lot of traders are really upset about SALT. A lot of clients wanted to leave California because of the high taxes in California, the SALT limitation, and things like that. So a lot of our clients with a large state and local tax are getting a little hurt. Yes, they are. They're not really getting QBI benefits so far. So a lot of clients are very upset about the new tax law. It's incredibly confusing. It's more work for us, leading to higher bills. There's less benefits. Their refunds are down. They have big payments that we're telling them to make because they had less withholding. A lot of people are really upset. Where was the simplification? Where was the savings with your accountant? Where was the postcard return? Where is the tax savings? Where's the beef? You remember the old Wendy's commercial? Where's the beef? That's probably aging me. It goes back probably 10, 15, 20 years. Mitch J. Are you going to send out the slides? IB puts the slides up on, you can see it in the additional materials on this webinar, and then you'll see the recording, and they'll have a YouTube version as well. Jim H. What about carryover losses? Well, yeah, the capital loss carryovers, you got to have capital gains to use it up. And Forex profits. Well, if you're trading Forex, it's ordinary gain or loss. Ordinary losses, hey, that's great. You can offset it against your wages. There's no 3,000 capital loss limitation. But ordinary losses can also be a problem because maybe you don't have any other income and you got a standard deduction, so your Forex losses are kind of wasted as ordinary. You'd be better off with a capital loss limitation. Or you have a capital loss carryover and you're looking for capital gains, you're hunting for capital gains, so you need to know about the Forex capital gains election. It's a contemporaneous election that you place in your own books and records. You're a Forex trader, you say, hey, I'm making the capital gains election. It applies to the majors and the minors. And on the majors only, for which the pairs trade on commodities exchanges, those are majors, you can navigate your way into Section 1256G, which is a special section in 1256 for foreign exchange contracts, Forex, that allows the lower 60/40 capital gains rates. You can have your cake and eat it too. Maybe stay in 988 for huge ordinary losses. With TTS, it's a business loss, and an NOL. Without it, it could be a wasted personal loss. Or with the capital gains election, maybe get into the lower 60/40 tax rates to get tax rates that are up to 10% less. But Americans need to trade with registered brokers, otherwise they're in contravention of CFTC rules using offshore brokers. So even if you're working with a U.S. broker, make sure when it comes to Forex, if it's a foreign affiliate, then it may be it's foreign broker and it's supposed to be registered with the U.S. as an RFED or FCM, because otherwise they want, Dodd-Frank wants Americans to have on the majors limited to 50-1 on the majors on leverage, and the NFA doesn't allow the hedging, and they don't want spread betting. They want FIFO. So don't understand the CFTC rules and stay don't be in contravention. If you're in contravention, we cannot offer our tax compliance service. I has another question. I am answering repeated questions. We are past one. We'll maybe cut off at 1:15 or 1:30. I might go extra long today because I know IB, some of the executives there even suggested it. They really like this, and I'm happy to please. So for sole proprietor active trader, is it advisable to get a DBA? I don't think you need a DBA. I don't think you need an EIN unless you have payroll. I think you can just use your social security number. Remember, with IB on that trading account, you're getting your real-time data. As an individual, you're paying your non-professional rates. If you open up an LLC account with an EIN or an S or a partnership, general partnership LLC or corporate account, S Corp or C Corp, they're going to want the higher professional data feed fees, and that might be another $125 a month. So there are a few brokers that might absorb the higher rates, but they have much higher commissions and they can afford to do that. If you want those low commissions with IB, you're not going to get keep those lower rates with an entity account. So when you go with the entity to deduct health insurance, to deduct retirement plan, that really, the benefits way outweigh those higher professional rates. Now it comes down to what platform you use. Some platforms may give you the data and you're getting extra data and platforms from a third-party platform. I don't want to go into all the iterations of that on this call. Ritz G again. Section 1256 loss carryback. Can those be carried back for state taxes? No, a lot of state taxes like New Jersey don't allow losses. So when it comes to when you want to check the box on the Form 6781, you don't have to do it file the extension. You have time to figure this out. You'll check the box on the 1256 loss carryback election to offset on a 1045. You have until October 15th to do this, to offset the 1256 gains only, not other types of capital gains, in the 3-year carryback period But talk to our professionals about how it will come down on your state level, because it may not work out on the state level, and then you'll have a carry forward. And so you want to work out federal and state issues and use our firm for that carryback to do it right so you don't trigger IRS questions. Harmeet S. Can you amend your 2017 return to MTM? No. If you missed making the MTM election, absolutely not. Zero tolerance. Now, if you missed the election April 15th, let's say you didn't attend the session, you watched the recording, you're watching the recording, it's May. There is a private letter ruling that you can file for 9100 relief within 6 months by October 15th, but you can't have any prejudice. You can't have any capital loss carryovers. You can't have capital gains for a period and then losses. You're going to file a private letter ruling. It's going to cost thousands and thousands of dollars of fees to the IRS and professional fees. And probably in 99% of the cases, it's going to be denied. So it's going to be a fruitless exercise. So you're probably better off just setting up an entity to get a do-over on 475 for an election within 75 days of inception. But that then only applies to the entity trading going forward. So don't count on that private letter ruling. There's only been one case that worked, Larry Vines. I cover it in the guide. Get my guide to read about that. G1C. I am a full-time day trader. I took a 50,000 loss all short-term last year. I plan on not doing any taxes for 2018 due to the loss. I expect to make 150K short-term capital gains this year. You got to do your 018 return. You got to get the filing in. You got to report those capital losses so that you have a capital loss carryover. A lot of traders, they lost money they never filed. And now they make money and they want to use the capital loss carryover. They don't have a capital loss carryover. There's only a capital loss carryover if it's on your immediate year preceding return and it says capital loss carryover. So if you had a loss in 015, that return was due April 15, 2016. 3 years later is April 15, 2019. You better file your 2015 tax return by this 15th deadline to lock in that capital loss carryover. Then you got to file 016, 017. You got to get every year on the books. So that's what this trader needs to do. So you can't write it off unless you file it. It's got nothing to do with the trader tax status. Trader tax status is for your business expense deductions. And then you might have an NOL carry forward from that. So don't just put your head in the sand and walk away. The IRS will probably see that you have a loss from the 1099B because now they have cost basis information, but they see huge proceeds and they don't know for sure. So you're going to get a notice from the IRS. So get the filing, get the extension in, then you have time to do the return. Dahlia S. Doesn't short-term capital gains losses get taxed as ordinary income? Yes, you're right, Dahlia, it does. So what is the advantage of 475? You're absolutely right. 475 is ordinary income. Short-term capital gains is ordinary income. It's the same treatment for gains and losses, although short-term capital gains can use up capital loss carryover. So it's the same on the upside. What's the difference? The difference is on the downside. Without 475, you got subject to the wash sale loss adjustments, royal pain in the neck, disenfranchise you from your losses, tax deferral at year end. So you want an exemption from the wash sale loss rules. And if you have a big loss, you have wages of 100,000. You have a trading loss of 50,000. If it's capital, you're limited to a 3,000 capital loss limitation. You have to carry over 47,000 to the next year. You get very little relief in the current year. But if it's 475, you can offset the whole 50,000 against your wages of 100 and get a huge refund right away. It's tax loss insurance. Stephanie M. How does the brokerage firm's monthly statement change? Does it if applied for TTS? It doesn't. TTS is for your business expenses. The broker statement has nothing to do with 475 cat wash sales. It's, your realized gains and losses. It's your trading activity. So your broker doesn't need to know anything about TTS 475, any of this. You can handle all this on your own level with trade accounting software and your tax preparer. Wilson L. After I file an extension, can your company do the tax return for me? Yes, Wilson, that's our core business. So we want you to file your own extension, and we want you to consider the 475 election. If you need help, do a consultation with me by this Friday, because I don't have appointments available Monday unless they're emergency, but I don't have them open on my calendar. There are still a few slots left before Friday, Thursday and Friday. But use our content otherwise, make your correct decision. And then after April 15th, there's plenty of time to do our normal process, which is you start with a new client evaluation with my partner, Darren Neuschwander. He looks at your prior year return that you upload to ShareFile, secure and encrypted. He sees how we can help you, what the price should likely be, if you're a good fit for the firm, if we're a good fit for you, and then he'll recommend our tax compliance service. If he feels we're not a good fit, he'll say, maybe not this year, maybe next year is better. We want clients that are a good fit so that we have a long-term relationship that's very successful for all parties. Albert F. Can you tell us exactly what form we need for the 475 election? You're going to go to the blog post. So I'll do it right now. So I'll click on, let me go away from this. So I go to the blog and I see, let me make sure that you see my screen. I see that you do. Okay. So scroll on the, click blog. It's taking a little time because of the GoToWebinar. You see the blog list. Scroll down to the Traders Elect 475 for massive tax savings. Open up that blog. Scroll down. I go through the examples on why it's so good. So do this reading about it. Get down to the bottom, and it's got the election procedures. And it tells you how you're going to attach it to the return or whatever. And here's the election statement that you're going to use, the exact statement. You're not going to worry about the 3115. That's going to go with the return next year. So go and you'll see the exact election statement. So let me go back to the questions. And again, on that election, let's go through that. Let's read it through. Under Section 475F, the taxpayer elects to adopt the mark-to-market method of accounting for the tax year ending December 31st, 2019 and subsequent tax years. The election applies to the following trader business. You're a trader in securities as a sole proprietor. You don't trade commodities, 1256 contracts. And you're reiterating it's for securities only and not 1256 contracts, which is really commodities. So if later this year you happen to trade the broad-based index, the SPX, and which is a 1256 contract, you don't want 475. You want to retain the lower 60/40 capital gains rates. So you don't need tax loss insurance. You got the loss carry back in 1256. And you also have the lower 60/40 rate. So 475 is free tax loss insurance for the securities trader, but it's expensive tax loss insurance for the futures trader. So think out what you're going to do with this election and attach it to your extension. All right, let's go back to the questions. Jumping back and forth on the website takes a little bit. So now I see a lot of questions on the board. We're going to keep going. I don't think we have a hard break. This is an unusual session. This is one where we said we were going to be available to you last minute, and I have the encouragement to do this from the executives of IB. So Albert F. One second. Let's see if that was where we left off. Yeah. Can you? Okay. Yes, that was the question. Charles M. I have a $250,000 long-term capital loss carry forward. Okay, you need capital gains. Going way back to 2014, you've been deducting $3,000 a year, and that's only because you didn't have other capital gains. Don't get confused, folks. You have a monster capital loss carryover. It's unlimited against capital gains. The 3K limit is only against other income after you exhaust the current year capital gains. So you're on the hunt for capital gains. So must I deduct the 3K every year? Yes, even if it's wasted, you must. That's how it works. It's very procedural. And you're planning to eventually have a long-term capital gain on the primary sale of your residence. Remember, you got the exclusion of 500K, 250K single if you've lived in it in 2 out of the last 5 years. But above that, you're going to have a long-term capital gain. So don't panic on your deferred capital loss carryovers. It's a deferred tax asset. It's for your lifetime. And hopefully you'll use it up. But if you run out of money to trade, it's hard to use it up. But in this case, the person has a residence to sell. But again, remember the exclusion. Elena PK. I traded FB last year. Not sure what you mean, if that's a symbol or not, and had a lot of wash sale losses. So it sounds like a security. Maybe it's an ETF, I'm not sure, or Facebook, a security. I don't know every symbol, folks. Sorry, I'm not a trader myself. But I did not sell the stock last year. So you traded it, had a lot of wash sales, but did not sell. I'm not sure what you mean. Maybe you had a core position and traded around it. I will exit the stock in 19. Can I take the wash sale deductions? You just got to run the wash sale logic. You got to run the software and see if you have wash sale loss. You may have wash sales that are embedded into that core position. It can get very confusing. Charles M. It doesn't matter if something's long-term or short-term. In the end, I mean, short-term offsets short-term and the carryover, long-term offsets long-term. But in the end, it's all consolidated on the Schedule D, so don't get too hung up on the buckets. Jules F. Do we need to file a written statement in addition to the Form 3115? So you're getting off on the wrong mistake here. What is the sample format? I just look on the blog right now on the site. That's the declaration statement. You're not filing the 3115 for a 2019 election. If you filed a 2018 election statement by April 17th, 2018, then your Form 3115, your 2018 Form 3115 is due with your 2018 tax return, which you can put on extension so that then the 3115 is on extension. But if you're making the 2019 election by this April 15th, then your 2019 Form 3115 is due in 2020 when you file your 2019 return. Don't get confused, folks. Peter P. Home Office. Can you include home office expenses on the S Corp? You're supposed to get reimbursed from the accountable plan for that. You're not using a Schedule C. The unreimbursed partnership expense, which is some accountants want to use that, we get a warning that the IRS may not agree to that. So if you've used the S Corp, you should have done the reimbursement before year end. And the interplay with SALT is very tricky, folks, especially if you have losses. You don't have home office income to absorb it. SALT being the state and local taxes, including real estate tax. Scott L. If an MTM securities trader, no entity, has a 2018 loss, is there any specific reporting required for QBI deduction? You're going to hold off on the QBI worksheet because we don't have the green light on that yet. So it's just a question of when you in your software, are you labeling the trading income, the 475 income, as QBI income, and are you passing it through and then your Schedule C for the expense portion as well? Are you labeling it as QBI or not? And I'm saying it's premature to do that. So I don't want to give exact guidance on how to do it if in fact you cannot do it. So it'd be beyond the scope of today. G1C again, a lot of repeat questions. I can't go on forever, so try not to ask any more repeat questions, folks, until I get through the round. There's a lot of repeat questions. Then you really should be doing a consultation with me, but you might not get access. There's only a few slots left, maybe about 5 slots left. So G1 had asked, I trade about 1 million shares a month, thousands of trades. Yeah, you're probably going to qualify for TTS. But remember, TTS is undergraduate school, as an analogy. 475 is grad school. Not everybody goes to grad school. Even before you might graduate from undergraduate school this year to know if you qualify, you got to get your application in on time for grad school. If you graduate undergraduate, then you go to grad school. If you don't, the application that you're making now would be null and void. Samir K. I had my current accountant file an extension for 018. Good. He may not have filed the 475. Can I still submit it? Yes. You print out a copy of page 1 and 2 of the 1040. Write do not process on it. Prepare a cover letter saying I inadvertently omitted the 475 election statement attached herewith. Attach the election statement. Mail it to the address where you filed the return. That should be, it's outside of protocol, but it should work. Same thing if you already filed your extension. You can print a copy of the extension, write do not process, because you don't want them trying to process something again. You're telling them, hey, I filed this, don't process it again, but I left this out, and here is what I left out. And file it certified return receipt when you mail it. If you're so if you're e-filing, let's say a TurboTax return, they don't support 475, you might want to do that same procedure. Samir K again. Oh no, that's the one I just answered. Jerry B. I have an entity LLC already set up in December, but I'm trading so far as an individual. That doesn't count for what's in the entity. Can the entity be modified and allow me to shift liability? No, I mean, you can't. If you want to trade in an entity and you set up an entity, the entity has to have a trading account. The entity has to make a 475 election. They're two separate taxpayers. Zach, what are the costs of setting up a pass-through entity? Well, you do the consultation with me for $250. That's the current price. To see if you even want to have an entity and what's best and whether you qualify for TTS, elections, the whole map, the whole plan. Then you purchase the entity formation service for $425. Our outside attorney is $235 to do all the legal paperwork. State filing fee is $99 for an LLC or corp if we're going to go the S corp route. And then you have the state filing fee, which you pay directly. So all the formation costs wind up costing under $1,000. It depends on what the state costs are. We have all that on our site on the entity formation page under services. And I encourage you to use our entity formation service because there's so much more involved with the resolutions, the elections, all the strategies, the accountable plan. You're getting the whole ball of wax. It's so much more than just setting up an entity, which you could easily do with the state directly or through another site. So you want all our trader tax advice and work that goes with it, all the startup issues, strategies, and more. And the execution that comes with passing the baton to my partner to make sure you're starting it up properly with the accounting, with the taxes. That's included in the price. All right, so John A. Is there an easy way to tell the IRS to close an S corp with no income or employees? Yeah, you file the final return. It's pretty simple to do, and you make sure to do it with your state so that you have clearance, which you need with some states. So you work with your tax compliance CPA firm to easily do that and file the short year final return on time. And then once the entity closes, the 475 election that was in it, everything closes with it. Jerry again, if you have large gains in 018 but substantial losses in Q1 this year, Yeah, definitely file that. You got a clean slate. Definitely file the 475 election. Neil W. Do you have to file the 3115? I don't see the rest of your question, Neil. The election statement goes before the 3115. The 3115 is to perfect it. Stephanie M. A lot of repeat questions here, and I recognize a lot of these names as clients of ours. Do you recommend using a separate segregated account for futures? Well, futures are segregated account, but if you have investments in securities, I do recommend that they are segregated very carefully in form and substance with your TTS trading. Now, if you have segregated investments in, let's say, FANG stocks, as an example, and you trade FANG options in your trading account with 475, the IRS can play havoc with you. You are better off ring fencing your TTS trading with 475 into an entity, but then you can't do portfolio margining with your investments. So it's a little tricky because I don't want the IRS to pull your Apple investment in stock into 475 so you don't get the furl at year end on the long-term holdings, and you also don't get a long-term capital gain. Or the IRS could do the reverse. They could boot out your Apple option losses and push it into investments. So if you're doing significant investing and significant trading and you're electing 475, you're probably better off ring fencing the trading into an entity. And you can do some core holdings in the entity too for portfolio margining. You got to work with me to sort all that out. There's no extension on the 475 election, Neil. Lion M. We don't have any Russian speakers on our team. We have Chinese speakers. We have other speakers, but not Russian. Sorry about that. And by the way, if you use our trade accounting, the trade accounting software that we use with the retail license, it's Windows-based, not Mac. But we, of course, run Windows Server. I myself use a Mac, but our Windows Server for the company, that's where we run the software for the trade accounting. Albert F. I have 240K capital gain in 2017. A lot of war sale 2018. Can you help me? Yeah, we can help you with our trade accounting service, but after April 15th. So if we're going to do your 2018 trade accounting and you had the account from 2017, we need to know what those opening wash sale loss adjustments were for 2018. It's very tricky. It might be better that we just do 2017 and 2018 and hopefully we still have the data. Every year you finish with your broker, download the data. So if we have to go back and do a trade accounting, maybe because you're under audit or for any other reason, you have access to the data. Make sure you preserve your data. It's all about the data. Emily W. I wrote a memo to file in late 2018 explaining my worthiness. So you wrote a footnote saying why you had the TTS. Good. And you claimed it in 2018. Good. Do I send that to the IRS with my Schedule C for trading? No. When you use trader tax status, what does it mean? Well, what it means is you look back at the year, you took the bread out of the oven, you saw it rose to be bread, it wasn't flat bread, and you're using trader tax status for the year or part of the year. So you're adding a Schedule C, you're saying trader in securities, C footnote, and in the footnote you're explaining what a trader in securities is, what the rules are, and how you met those rules with your volume, frequency, holding period, hours, the whole works. That's all part of your tax return filing. That's what a trader tax return is. That's why a lot of clients want to use our firm because we have great footnotes. We do this properly. We don't botch it. We do away with red flags. We have a transfer strategy to do away with the Schedule C loss, where we transfer a portion of the business trading gains to zero it out, unlock the home office deduction. That's the nuances of a trader tax filing. That's where we earn our salt as a firm, doing all that. People botch it. Go back, watch some of the recordings for botching returns, how people botch it by maybe putting the trading loss on the Schedule C. It doesn't go there. Harmeet S. If you elect MTM, can you separate short-term losses from long-term gains? Yes, you want to segregate your investment positions in form and substance, And don't give the IRS a chance to play havoc because you trade substantially identical positions to what you invest in. It's sort of like the do not trade list that you had with the IRA. Ritz G, does New Jersey allow loss carry forward? New Jersey does not allow losses, but there is some benefit for NOL carry forwards. I have that on the blog. Go to the blog, search Battle for my Battle of the Tax States series, and I have New Jersey in one of those blog posts. New Jersey is not a great state for traders because of not allowing losses. John A, do I really need to enter a balance due on my extension if I have overpaid the taxes? Just fill out the 4868 correctly. If you don't owe, you don't have a balance due. So there's very few line items. Fill them out accordingly. A lot of thank yous. You're welcome, folks. Amir H. We're coming to the end of the question, so we're going to wrap up soon, Cynthia. Amir H. What is the minimum requirement to deduct health insurance premiums? Self-employed health insurance is an adjusted gross income deduction. It's not an itemized deduction. It can be an adjusted gross income deduction, which is sort of like a business expense, but you got to have earned income, self-employment income, SEI. Trading gains are not SEI unless you're a full member of a futures exchange trading futures on that exchange, and that's rare. So you don't have earned income unless you're a consultant or have it from another source. So that's why you need the S Corp to pay yourself salary to reimburse the health insurance premium deduction. And there's no offsetting payroll tax for that. And then it unlocks the opportunity to do a retirement plan deduction too, which also requires self-employment income. That's the S Corp strategy. That's why people set up the single member LLC or spousal member LLC with S Corp election to unlock that very big health insurance deduction. Could be $20,000 a year. No offsetting FICA. Great deduction. Worthwhile to do it. And the solo 401k, which might be $62,000 a year for each spouse, if both spouses are working. So yes, consider that S Corp for those deductions if you want those deductions. Now, if you have them already in the job, you may not need it. Jennifer C. Can I make a 475 election for certain short-term brokerage accounts only? Well, the election is by taxpayer and you can segregate your investments. So that's effectively how you do it. It's not just by account. Some people get confused by that. Now, effectively, it might be that if you've designated an investment account and you act accordingly in form and substance. I have other long-term investments, ISOs, employer stock. Yeah, that's exactly. Those are your investment positions. You can have your cake and eat it too. Just be very diligent about the contemporaneous segregation in form and substance. So if you establish a trading position, don't let it morph into an investment position. Sell it and then buy it back as an investment position. Hedge funds do that, by the way. They let their profits run, and for that reason, they may not want 475. A CD for Forex traders, no trader tax status. Do you report the interest? The rollover interest is really not interest loans. It's really part of your profit or loss. And don't forget to pick up the appreciation or depreciation on the open rollover trades, because technically, IRS speaking wise, it's not a rollover. It's really realized. It settles in 1 to 2 days on the spot Forex. And if you do a rollover trade, technically the IRS treats it as a sale and a repurchase. So if you have open P&L, pick that up too. The rollover interest is just 1/2 of it. I cover that whole issue in the guide. So get my 2019 Trader Tax guide for that. Everybody needs a guide. It's only $60. So I think people should get it. It's worthwhile. It's worth its weight in gold. I cut right to the chase on a lot of saving strategies. Zach, how is 2018 wash sale loss deferral accounted in 2019? Is it just a loss that's transferred? It's not. If you run the trade accounting software that we're using TradeLog, it's going to download your debits and credits for 2019. It's not going to download your opening wash sale loss adjustments on open positions. You got to enter your open positions. You got to enter the cost basis, and you got to enter the deferred wash sale on the open position, and then you got to enter the deferred wash sales on your closed positions, the one you sold in December and rebought within 31 days in January. If you don't get the open right, then your 019 file could be off. So you got to get when you convert from apples, which is the 1099B type reporting, to oranges, which is the trade accounting software that's IRS compliant that we're using, you got to account for the difference properly. Otherwise, you have a hole in your reporting. If you're not sure about that and you've done that work with us, check back with our Christy Cam to go over how we handled it for you. Let's second. CD. For Forex account, there is no 1099B on spot Forex. You're correct. So if they reported the interest somehow differently, again, it's part of trading P&L. So you should attach that Forex report with the summary reporting, which we use as industry practice for Forex. Ritz G. Does TurboTax allow writing footnotes? I'm not sure if it does. It may, TurboTax, don't forget, has a lot of different versions. And that's their business. They give you some cheap, lower price versions, but then it doesn't have a lot of features to allow a lot of things. And you might need a more expensive version that might allow downloads. Remember, if you're downloading a TIFF file from your broker, you're downloading the 1099B data. That's with the apples, and you need the oranges. So if you're going to use apples, then remember, you're using apples and you're not really 100% compliant. As a single proprietor, what is the best way to segregate? Well, segregate in form and substance, a separate account, and then use the do not trade list so that you don't trade the same thing that you invest in. I'm almost at the end here, folks. Amir, so S Corp is necessary, LLC. So you form the LLC and the LLC elects S Corp within 75 days of inception. Ritz G, I have 1256 losses in 2018. I'm carrying them back. 2015 to 17, I filed the extension. So yeah, you'll file your 1045 after, because if you're going back to 015, that was due if you filed it on time, April 15th, 016. 3 years later is April 15th, 019. So if you file a 1040X after April 15th, it might be too late, but if you file the 1045, it's not. Check with us for help on that, Ritz. Okay, I answered all the questions. Hooray. Didn't even run out of gas, but almost came close.
Well, so that was a marathon session, Robert. Thank you so much.
Before I give it back to you, Cynthia, let me just tell everybody, come back on the homepage. You got the tax center, you got the blog, you got the recordings, you got the, you might be able to squeeze in a consultation with me. We got the tips here about the extension. You got the 475. Get the extension done, get the guide, and then come to us after the 15th. So back to you, Cynthia.
Okay. Well, thank you so much, Robert, especially for your time at this very busy time of year. So we all definitely do appreciate the extended session here today. Now, I realize Robert's answered quite a few questions, and if you do want to come back and review his answers to you or to others, or even access the same slides that Robert's been using today, watch your email. I'll be sending out a follow-up message with a link to the recorded playback and the webinar notes shortly after today's session ends. By the way, this will also be listed on the Interactive Broker site. Underneath the education menu, there's a webinar section where you can go to the recordings to access both a direct link to today's playback and the associated webinar notes. So with that, thank you all once again for participating, and many thanks to Robert Green of GreenTraderTax and Green, Neuschwander, and Manning for your time here this afternoon. By the way, have a great rest of your day, everyone, and watch your inbox for those follow-ups if you do want to review the concepts. You can all exit today's session using the X in the upper right-hand corner. Thanks, everyone. Have a good one.